Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert. He's got the goatee in effect here. The facial hair is back. Old man Bert. And you know you're rolling with Lanny, the Dividend Diplomats. And today we're talking to you about another dip in the stock market.
I know, Lanny, you got a little beard coming back here too. You got some stubble. Looks like the beard.
A little 5 o'clock shadow.
Yeah, they're back, baby. But before we start talking about this stock that's going to buy the dip, smash that subscribe button. Give us that nice thumbs up, everybody. Thank you. We appreciate it. All the support. We're over 10K now. We're on to the next milestone. But you're not here to listen to us talk about subscribers. You're here to know what stock we are talking about. What stock are we maybe buying that dip for?
Exactly, Bert. And again, we appreciate everybody's love and support here on this journey to financial freedom by investing into dividend stocks and using that dividend income as the main source of passive income here on that journey. So if you haven't seen the news or if you haven't paid attention to the stock market, there's one amazing dividend growth stock that took a plunge in one day. And that stock is AbbVie, ticker symbol ABBV. We got a lot of comments about people asking if we were buying the dip. But first, we'd like to talk about why their stock price dropped, if Bert or Lanny were buying the stock this week, as well as what they look like through the Dividend Diplomat stock screener to see if they could be a great dividend growth stock to buy now. So Bert, did you want to kind of go through some of the pieces of news related to AbbVie and why they dropped in their stock price by at one point over double digits in one day, but ending the week down over 6.5% to almost 7%?
Yeah, of course. So the story with AbbVie, ever since their spinoff with Abbott Laboratories last decade, was they were I'm trying to think of the way to say it. They had significant portion of their sales in their top drug, Humira. That was always the story with AbbVie. Humira was on a rocket ship trajectory, but was the company ever going to be able to diversify? Fast forward a few years ago, AbbVie starts to pivot out of there. They acquire the company that owns Botox. They start investing and trying to diversify that drug portfolio to get away from Humira. So you'd be asking, if they're diversifying, that's fantastic. Why did their stock price drop then if they are working on splitting out that revenue stream? Well, it's because one of the new drugs in the market, one of the new drugs that AbbVie, Pfizer, and everybody else that are relying on for future revenue growth received some pretty harsh news from the FDA this week that resulted in some additional warnings about the drug that's going to require some more testing, some more results, and some more disclosures to the consumer that could potentially impact future sales growth.
Exactly. And, the main area is for the rheumatoid arthritis here. And specifically, the FDA really threw the hammer down on their new JAK safety restrictions for the large pharmaceuticals. And AbbVie obviously is a large suspect to the FDA new safety regulations. And really, it's about the inhibitors saying that they need to now show a warning that they could increase the chance of obviously cancer, heart-related events, and even possible death.
Mm-hmm. Yeah, and that's generally not a good thing, especially with medication, especially with what they're trying to address with a new revolutionary drug in the market, something that is new to market, something that you're relying on to solve this major problem. Having significant concerns about cancer, heart-related events, or death is not a good thing, and that doesn't bode well for the start and the launch of this product across the industry, not just AbbVie.
Just when you thought COVID-19, the Delta variant was enough, now we got to worry about people taking arthritis medication and dying.
Well, it's funny. It's like regular illnesses. You kind of forgot over the last year and a half some of the other regular market conditions that come up with sicknesses, with developing new medications, because the rush was always address COVID. People weren't getting sick because they weren't together. But now you're starting to come back to reality a little bit. These types of things start to bubble up. It's interesting.
Exactly. And, the drug that AbbVie has, and people in the comments can correct me if I'm wrong, and especially in the pronunciation, is the RINVOQ or the RINVOQ drug. That's the one that's under scrutiny that AbbVie owns, that treats adults with that rheumatoid arthritis.
Yeah, and remember, we're just a bunch of accountants here. We're not a medical expert. Our specialty is not pronouncing these complex medications. So give us a break if we didn't say it right.
Exactly. So AbbVie dropped again by a significant amount, again, almost 7% throughout this last week of August and into September 3rd, almost 7% overall. Now, again, keep in mind, AbbVie is a 200 billion market cap company, one of the biggest companies in the world. And, in the Q4 of 2020, AbbVie also had a nice dividend increase, again, of double digits, keeping up with that growth rate at 10.16%. So now that there's a big stock decline, and I know Bert had mentioned that he bought a few shares, I think a week or two ago. The question now, since we just talked about why they dropped, did we buy the dip? So Bert, you want to lead us off to see if you bought any dip in price on AbbVie stock?
Yeah, so it's funny that you mentioned that I wrote on our blog too, which we'll put a link to our blog there. We aren't just YouTubers, we will write articles on top of it. On August 20th, I actually started initiating a position in my wife's portfolio for AbbVie. We bought 2 shares, a small amount at $118.85. What was interesting was this was before this week's news, obviously, of what happened. AbbVie was a discount in my mind then. So to me, the question was, are you going to buy the dip? The short answer is, yeah, we added an extra share for my wife during this time too, because we wanted to keep building. And what I'm going to use with this video and why I'm excited to run this company through the stock screener here in a little bit is, are we just going to continue buying this dip? Is this something we want to keep adding and keep building her position? So yes, we bought before the dip. We bought a share this last week. So let's see, everybody. Are we going to keep buying more here? What about you, Lanny?
Honestly, I did not buy the dip. Not because, I didn't want to. Just more so, hey, I enjoyed watching what was happening with AbbVie. I think it's a great dividend growth stock. I think it could deserve a spot on your watch list and in your portfolio. Now, the question I have for all the viewers, leave a comment and give it a thumbs up here on this video. Did you buy that dip on that AbbVie stock? We want to know. We want to know if this is where everybody still likes to put their funds in their dividend stock portfolio.
Yeah, no, that's exactly right, everyone. So please, yeah, give us those thumbs up there. But so my question is, am I going to keep buying the dip? That's a very valid question. Is it time to keep buying now that we know about the stock, about their drug medication, their issues, but that's still solid 10% dividend increase that they had last year. So let's run AbbVie through the Dividend Diplomats dividend stock screener. The 3 metrics of our stock screener are the price to earnings ratio less than the S&P 500, the PE ratio less than 60%, and a history of increasing dividends. And oh wait, I left out the net bonus metric that we always throw in there, the dividend yield. So everybody, we're recording this video. The price we're going to use for AbbVie in our analysis is as of Friday, September 3rd, 2021. So keep that in mind as you're looking at the stock price and watching this video.
All right. And guys, all the other viewers and commenters out there, look, we've jumped right into the stock we were talking about. We're getting into the metric. It's time to see if AbbVie is a dividend stock to buy right now. So AbbVie was trading at $111.62. So when we look at that first dividend stock metric, the price to earnings ratio, analysts are expecting $12.65 still on a go forward basis. For that first metric of that PE ratio is below 9 times forward earnings. We're talking 8.82 times.
Yeah, and what's crazy here is you compare that to the S&P 500, whose PE ratio is at 35x right now. So that's nearly 4 times what AbbVie is at the moment. So yes, clearly AbbVie is trading at a significant discount to the market. So that's a big check mark right there.
Big check mark. Bert, do you want to take over and look at the second dividend stock metric, the dividend payout ratio?
Absolutely. We love the payout ratio because it measures the safety of a dividend. We want to make sure those dividends that we're investing in are going to be able to be paid, that we're not paying out too much of our earnings and jeopardizing the safety of the dividend. Ideally, we always look for 60% or less in our screener, but we think that perfect payout ratio is between 40% and 60% here. So let's see where AbbVie falls in the screener. Their annual dividend is $5.20. You divide that by the $12.65 forward EPS. That gives you a perfect payout ratio of 41.11%. Fantastic.
Perfect, Bert. I love it. That really speaks to the safety and soundness to the dividend. Still has room to grow and still has room to invest plenty into research and development in that new dividend, again, into that new pharmaceuticals, any new products that AbbVie really wants to continue to add to help diversify their own portfolio. For what that dividend growth streak look like and the growth rate for that third dividend stock metric.
Yeah, so I'm going to tell you, AbbVie has only increased its dividend for 8 years, but I'm going to give you a big caveat here about AbbVie. They have increased it every single year since they were spun off from Abbott Laboratories. So ever since this company's been in existence, they have spun it off. And guess what Abbott is? They are a dividend aristocrat that has increased its dividend for over 25 consecutive years. So their origins are from a company that emphasizes dividend growth, and they've shown and demonstrated their ability to increase that dividend over since the company has been spun off. They have a nice solid history here. Lan, you want to tell us about that dividend growth rate, the second half of this metric?
So the second half of the metric, the growth rate average, AbbVie over the last 5 years has been able to grow that dividend to the tune of 18.35% average each year. AbbVie slowed it down a little bit in 2020 during a pandemic, as their increase was only 10%. I could still see AbbVie continuing to grow the dividend somewhere in that 7 to 10% range for the next few years. Obviously, we'll see if we're right or wrong. But again, you can't beat that dividend growth rate on average right now for, again, a $200 billion pharmaceutical company.
Absolutely not. So let's move into that bonus metric, the dividend yield.
Yes.
Yeah, so we'll take their $5.20 dividend, divide that by the fallen stock price of $111.62. That gives you a dividend yield of 4.66%. So let's think about that for a second. Their dividend yield is closing in on 5%. Their 5-year average dividend growth rate is 18%. And sure, you can say that it slowed down a little bit, but it was 10% last year. So even taking the conservative last year dividend increase, that dividend factor is over 15% with that 4.66% dividend yield and that 10.16% dividend increase from last year. And that's the conservative factor right there.
I'm looking and I'm liking.
There it is. There it is. So to summarize here, before we get to answer that question of are we going to continue buying this dip, AbbVie's PE ratio, 8.82. Payout ratio, 41.11%. Their 5-year average dividend growth rate's 18%. They've increased that dividend for 8 years, every year since they have been spun off from Abbott, and their dividend yield is 4.66%.
Wow. So Bert, coming into this next week, what are you doing, my man?
Yeah, I will definitely be adding a few shares for my wife to continue building out that position. I mean, she has a blistering 3 shares because it's such a new position for her portfolio, but it would be nice to get her to at least 10, get her double-digit shares. So I don't know if we're going to buy the extra 7 all in this week, or we might just start slowly dabbling over time to get it to that mark. Maybe that's the goal by the end of September, is to have 10 shares of AbbVie in her portfolio. What about you, Lanny?
Guys, well, first I'll say that the name of the game always is moving your assets into lower or no income producing into dividend stocks as an example, or one way to really add income and really get an appreciable asset on your balance sheet. Am I buying AbbVie right now? I'm going to add them to my stock watch list. Love the metrics, love the dip. Obviously, if you actually look at the performance on a year to date from 1/1 to now, they're up about 6% year to date, and then 52 weeks from last, September to now, they're up actually about 21%. Overall, really lagging the S&P 500. So you can argue that there is a lot of value still with AbbVie.
Yeah, I mean, I guess those metrics definitely look better after the last week, after the market took a hacksaw to their price. But that's why we're here talking to you about AbbVie. Obviously, we see it, you see it, and you know what? The market sees it. But looking at those metrics, the metrics just make sense for AbbVie right now. They crushed the Diplomat's dividend stock screener. And it is so hard to find an undervalued stock in this overpriced market. So everyone let's keep working to move, as Lanny said, that cash from the sidelines into these income producing assets.
If you're buying AbbVie stock this upcoming week here, you know, the real first week after Labor Day, starting not September 6th, but September 7th, let us know in the comments. Again, we appreciate you guys for stopping by. Give this video a thumbs up, turn it blue if you're still here hanging with us. If you haven't already, subscribe to our channel so you don't miss a beat on the dividend news and dividend investing from the Dividend Diplomats. Again, that was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.